Squawk Box Tesla shares, they are defying gravity. Even after yesterday's announcement of a $2 billion stock offering, shares staged a turnaround, ended the day up about 5%. A new SEC filing showing Tesla will price those nearly 2.7 million shares at $767 per share. Tesla stock up 160% over the past year. But should investors expect they'll keep going higher? That is the debate and the question. We got Tesla bull Gene Munster here, founder and managing partner of Loup Ventures. Also Tesla bear Craig Irwin, senior research analyst at ROTH Capital. He's here with us on set as well. Let's go. You know what? I'm going to start with the bearish case, because right now that is almost become the contrarian case. And it might be more fun to hear what Craig has to say and then have Gene react. How about that?
That's fair.
Okay, so let me make an argument to you.
Yep.
On behalf of Gene. They raised the money.
Yep.
It puts them in an even better position than they were a day earlier.
Yep.
If this whole story is about are they going to have a cash crunch, they just helped themselves immeasurably.
So they had $6.7 billion in cash at the end of the quarter. Why do they need another 223, right? The only reason they need another 223 is if they're going to reverse what's benefited them to the tune of $400 million over the last 2 quarters, the lean out of the channel, and then we're going to see increased R&D and SG&A this year instead of R&D down like it was last year.
What happens if I told you that they were going to build another factory in China?
They got to have the demand for that. They got to actually sell the vehicles before they can do that. And the factory in China, they've been telling everyone, has capacity for 150,000 cars. I mean, today, the run rate that they theoretically can produce at is, 1,000 cars a week, 50,000 cars. They don't need cash for that. Okay. I think this is just them doing.
What do you think the stock's worth?
I think it's worth about 350.
You're still at 350. You don't think this advanced your calls at all?
No. I mean, I still think.
Do you think it was smart for them to do this?
Absolutely. It was the right move for the CFO. He made a good decision. There's an old axiom, right? You raise money when you can, not when you have to. Last year, they were backed into a corner a little bit. That's why everybody was negative.
Hey, Gene, what do you think of this idea that this is somehow a dire sign of what's happening here?
Well, just one stepping back, is I think the debate about Tesla is still relevant. I understand that the bulls have had their say over the last couple months, but it's a good debate. On one side, I would generally put the balance sheet camp. They're the negative side. And I think that the piece that is generally missing from that view, like we're talking about today about raising cash and liens and building factories, is really the undeniable truths that this plays into. There are 2 of them. One is the future of automotive is going to be electrified and autonomous. It's a big market, too. We're talking the Federal Highway Administration estimates that 2.5 trillion miles driven per year in the U.S. And so what we have here is one of the largest addressable TAMs making a big change. There's a debate whether Tesla will be the winner. But if you look at what builds to that point, I think that this is probably the best bet. So to put it in the most basic case, I think the people who are more negative on the Tesla story are simply missing the undeniable truths. It would not be a theme that I would want to be negative on, again, electrification and autonomy. And that would be my question is, why would you want to be negative in front of a leader, what is an undeniable truth?
So
what do you say?
Just to answer that, I'm actually very bullish on EVs. I'm a big believer in the future of EVs in the transportation mix. I look at Tesla trading at, strip out consumer finance, 3 times the valuation of Daimler, 5 times the valuation of BMW. This is really a bet whether Tesla's going to have the large OEMs catch up in the next 2 years or 10 years. The stock is saying 10 years and maybe never. I think 2 years is a pretty fair timeline. They have no strategic structural advantage.
On this traditional OEMs catching up. Recently met with a top 10 automaker. They've been around for 85 years. The meeting started out and they said, just because we've been around for a long time doesn't mean that we have a future. We need to make big changes. So it is true that these automotive companies have a fire, but they understand this is a very dire situation. And I would also add, this is not in the undeniable truth category, but I think that automotive is not 2 years behind. I really think it's 10 years behind. And at this point, there's an escape velocity question that I think will be difficult. My prediction is that in the next 10 years, we're going to have one of those top 10 automotive companies. They'll still be in business, but they'll be on a track to going out of business. This is going to be take longer than people think, but be more profound of an impact than people realize.
So my response is I'm very clearly in the 2-year camp.
Right.
Some of the brightest people I've met in the world in batteries have been inside the European OEMs. They really have state money behind them when they want to build the big factories. Tesla has no structural, strategic, long-term advantage. They've done a fantastic job. They basically, made the category successful, but it doesn't mean they're going to do.
But you don't think that the moat might be simply innovation, which is to say that it's going to take Ford and GM and everybody else several years to get even the first or second or third type of car out, whereas they might be on to next iterations of their cars, new, whether it's SUVs or other types of vehicles, all sorts of different things and there's going to be a constant catch-up game going on.
So I think a better word is risk appetite. So Tesla is very much like a technology company traditionally is, where they're willing to take a lot of risks, and a lot of the big OEMs have low risk appetite. They're not excited about taking outsized bets that can put their main product lines at risk over the next number of years. So they're much more staged in the way they do things. It doesn't mean they don't have the talent and the resources to do it impeccably. They still have the complete capacity to execute.
But you just said they don't do it. So why would they in 2 years?
Well, I mean, Volkswagen's
another point I want to add is, if I can interject here.
Yeah.
If I can interject, that this idea that traditional auto is going to somehow catch up, there's a problem, is that they have to re-engineer their production, just like the pain that Tesla went through. What that means is they're going to be producing cars to have it competitive on a price and feature basis at a loss. They'll have to do that for several years in order to catch up in some of the efficiencies that Tesla has had. So that's another piece. You have to start looking at the balance sheets of these traditional OEM companies and understand how much can they take, what kind of losses can they bear to actually get them to a volume where they can start to be profitable. Like exactly what you said is that they have cash cows with existing cars. They need to displace that with cars that they lose money. That is a dangerous combination that they have in the next decade.
And I categorically disagree. I think they have huge leverage already, and Tesla does not have anything other than time from the last few years that's on their side. Structurally, there's no reason that these large automotive OEMs can't step in and do this very, very successfully over the next few years.
Hey, Gene, if not Tesla...
Pensions are a structural thing.
Gene,
anyway.
If not Tesla, who? Meaning, to the extent you've thought about it, who else out there do you look over their shoulder and go, okay, well, I got to worry about that a little bit?
There's big automotive companies out there. If I look at them, I can't think of which one is going to really turn the corner, and don't feel compelled that any of them has, which sounds that I'm out of touch. That view sounds out of touch.
I just assume there's got to be at least one that you say, okay, these folks are like at least marginally clever.
There's structural problems. There's pensions. There's existing. All of them have partnerships. If you're going to say probably which one, Ford is probably in the best position of all of them.
Gene, what total EV sales are what percentage now?
2% global.
Then why do you think it gets to 50%? When does it get to 50%? And why do you think that can happen in 5 years?
I don't think it's 5 years, but it's going to 100% over the next 20 years,
well, how do you know
30
that?
years.
I mean, you just know, even though there's no appetite for consumers.
Well, because it's more. It's just a better experience. Things don't break as often. Okay. It's just a better product.
All right.
Okay. It'll be part of the mix. It'll be an important part of the mix. That's my view for a long time.